going to be looking at the challenge today. And a warm welcome to one and all. And for those of you not seen me before, my name is Langers. I am the overgrown child that is the Scruffy trader. And I've been doing a discipline challenge if you've been watching this series of videos. And the idea is really just to get you to think about your trading sort of more, how should we put it, methodical, I guess is the word I'm looking for. Because what I see all the time is it's the thrill of the game that gets people trading. So they're desperate to press the button. I need to be in a trade. Get me that trade. Why? Because I'm here. The screen's on. The charts move, so surely there's a trade. Well, there is. You can trade any chart, any time. The difference is being able to read the trade at the right time. Because how do you know it's going to continue? You don't. You know, that's where indicators, things like that come into it. But ultimately, there's one thing that'll tell you that. It's the price itself. So the idea of this sort of series of videos is to get you to think along those lines and train your mind to look for one good trade. And it's as simple as that. And the idea is one a day or one trade a day on one market and gain 10 pips. Now you can do that in many ways. You could say go for 5 pips and then put another trade on for another 5 pips. But then you start going back down into the route of, oh, give me a trade. I want a trade. So the idea is one trade, 10 pips. Hope that kind of makes sense. Anyway, I'm having a quick look at it this morning. I'll just flick this over and we shall have a little look. If you've been following the journey, you'll see I've been keeping it on this spreadsheet. Now I am on the FTSE this morning. It's slowing down and I put a question mark on the bias simply because it had a whopping sell-off yesterday with the end of the month. And today is the first of the month. So it's going to be a bit erratic and it's Friday. So that makes it even harder. So question mark. In other words, I'm just going to read the charts. All right. And it's as simple as that. Now the results, as you can see, we've done quite well. It's edging up, and the idea is to get to £700 worth of profit. Okay, eventually. That's kind of the overall target, but when we get to sort of 30 odd trades in, down here somewhere, there it is there. I'm not sure whether the margin requirements will let us get up to sort of 5 or a point. At the moment, we kind of stuck at £1.08 is roughly where we are. So who knows? We shall see. So let me just get this set up. Pull this down. We'll have a little look at what it is we are doing. Where we're at. Switch everything on. Boom, 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 boom. Or at least we will when it wakes up. Oh no. Bear with me, guys. I'll just reset the computer.
Well, we're waiting.
There we go. We're back. Okay. So what we're looking at. As you can see, there's been a colossal move downwards. Yesterday, I said it was long, which was this move here, and we caught our 10 pips. Good stuff. And today, we're having to have a little look at this and see what's going on. Now, my sheet would have said that this was a sell and a slow sell, but I changed it to a question mark. And the reason being is because this is excessive, and well, let's just say end of month, beginning of month, they're always hard times to predict. So what I'm going to do is I'm going to look at this more on a retracement trade than a continuation. And if I drop this to a 15-minute, we kind of see the waves coming in. It's pushed up, it's pushed down. We could get down onto here. Now, my thought process is as long as it stays above this level, we're going to try and move it up into this top section. So to brush the bottoms of here. If it breaks this, it's going to continue down onto this. That is the thought process. However, looking at it and thinking about it, it looks like it's this way. Okay, it's kind of a retracement. So that's what we're going to do. The idea of trading is really just to make you think. All right. So what I'm going to do with this one is I'm going to do a little candle count. 1, 2, 3, 4, 5. There is the move up. We're going to use this one back here as an entry point to go 10 pips that way. Okay. Now, hopefully, we might have enough margin to move it up to £1.08. We do just. So what I'm going to do is I'm going to put in 2 orders. Put one in at 58 on the top of the candle. Just kind of just up there. Like so. So that is 1. And then I'm going to put 1 in at 50p. Okay. But this one, I'm going to set it 5 pips backwards, but with the same 10 pip target. There we go. All right. So, right. That's where it gets a little bit nitty gritty. What am I doing here? I'm kind of laddering the price. Now, my initial part is it's going to pick this up. All right. If it runs straight into target, well, and leaves that one behind, well, it leaves that one behind. Just means that, well, we don't get as much money. However, how many times do you go into market, goes for you, maybe it's a few pips, and then pulls back on itself, then rattles forward? Happens quite a lot. So the idea of what I'm doing at this moment in time is to pick an order up, just like so, and put the other one in. Now, the way it works is it's kind of first bite trading. So whichever one of those two triggered, you would move the other one behind it. I know it sounds a little bit confusing, and to a degree it is. But the idea is say that triggered, you put 1 there. If it moves up, doesn't quite get there, comes back, picks it up, and then goes, you get more money, you get 15 pips. But if that one triggered, you would just move that one behind it. And then that way, you're getting best of both worlds all the time. It's kind of a laddering way of trading. If it's left behind and the other one goes to target, well, salivate. It's just one of them things. You were right. But how often does that happen? Not as often as you think. So that's the game plan. That's what we are looking to achieve. And we'll see if we get our 10 pips. I'll leave it running. And hopefully we get a little bit of money out of it. So catch you on the other side, guys. Okay guys, didn't even have time to get me coffee there, and it's took the target out. Happy days. Well, well, well. So we have £5.80 in the pot. So what do I do? Right, I can do two things at this moment in time. I can leave that on the table and see if it picks it up and then takes it into target, or I just walk away. Well, the sensible thing is to walk away, right? So I will just put that to bed. This was one of those occasions where the markets picked the order up and just kept on going. Didn't even look back. Fantastic, you know. I wish they were all like that. Sadly, they're not. But hey, hey, hey. But there's the markets being the markets and just showing you that whatever you think, big boy, I know better sort of thing. But the premise was right. Had the right idea for the trade. And off we go. The idea of splitting trades is really about trade management, you know, and it's how to protect your account and also get little bits of extra money out of it. Now, in a normal trading day, not doing this as a challenge, I wouldn't worry about that, you know, because I'd be looking to wait for the setup to come again and then I would trade again. And throughout the day, it does pay dividends. But there we go. Happy days, happy days. Well, that was very quick. So I'm going to enjoy the rest of my day off and enjoy my coffee. It's Friday. I don't do a lot on a Friday. I don't trade much. And get ready for the weekend and do it all again next week. So as always, guys, trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.